As the world watches the escalating confrontation around the Strait of Hormuz and the wider conflict involving Iran, a surprising narrative is emerging behind the headlines. While governments calculate military risk and citizens worry about rising fuel prices, some sectors of the global economy are quietly thriving. Wars traditionally destroy economies, but they also redistribute wealth and opportunity. And in this conflict, the biggest winners are not necessarily the nations on the battlefield, but industries operating far from the front lines. Let us break down exactly who is actually winning from the Iran war, because the answer is not who most people expect. The first major beneficiary of the Iran conflict has been global financial markets, particularly in the United States. Despite initial panic and volatility, Wall Street rebounded sharply as investors adapted to the new geopolitical reality. Market activity surged as traders capitalized on rapid swings in oil prices, currencies, and commodities. Financial institutions recorded record trading revenues as volatility created opportunities for profit. This highlights a fundamental truth about modern finance that most people never learn in school. Uncertainty is not always a threat. For the right players, it is a business model. Analysts note that major banks generated millions in additional trading revenue during the early months of this crisis, fueled entirely by energy market disruptions and geopolitical risk speculation. While ordinary people were watching their fuel bills climb, trading desks on Wall Street were having some of their best quarters in years. At the same time, the broader global economy has taken a significant hit. The International Monetary Fund has already downgraded growth projections for 2026, warning that supply chain disruptions and energy instability could slow economic expansion worldwide. Yet paradoxically, this same instability has strengthened certain sectors, particularly those positioned to respond to geopolitical risk. And that gap between who gets hurt and who profits is exactly what most mainstream coverage refuses to discuss directly. One of the most obvious winners of any war is the defense industry, and the Iran conflict is no exception. Governments across Europe, Asia, and the Middle East have accelerated military spending, ordering new missile defense systems, drones, and surveillance technologies at a pace not seen in decades. Defense companies are now sitting on long-term contracts that could generate revenue for years. Military spending tends to spike during a crisis, but the real profit almost always comes afterward, when nations rebuild depleted stockpiles and modernize their armed forces. That is when the contracts get truly enormous. The Iran war has triggered exactly that cycle, and the companies positioned inside it are benefiting enormously, while the rest of the world absorbs the cost. Another significant winner has been the artificial intelligence sector. Modern warfare increasingly depends on data, predictive analytics, and automated decision-making systems. Governments are pouring billions into AI research and development to maintain strategic advantage, effectively turning this conflict into a catalyst for technological innovation at a scale and speed that peacetime budgets never produce. In many ways, the battlefield has become a testing ground for next-generation technologies. And the companies developing those technologies are watching their valuations and government contracts grow in direct proportion to the intensity of the conflict. Meanwhile, the renewable energy sector has gained serious momentum as countries scramble to reduce their dependence on volatile fossil fuel supplies. The Iran war has exposed, in the most visceral possible way, the vulnerability of global oil supply chains, particularly for countries whose energy imports pass through strategic choke points like the Strait of Hormuz. Energy security has suddenly become a national priority at the highest levels of government, pushing countries to invest heavily in solar, wind, and electric vehicle infrastructure at a pace that years of climate policy debate never achieve. Even countries that were traditionally the most dependent on oil imports are now aggressively exploring alternative energy strategies, not out of ideology, but out of self-preservation. The Iran war has done more to accelerate the energy transition in 6 weeks than a decade of international climate summits. Geopolitical rivals that remain outside the direct conflict are also benefiting strategically in ways that are only beginning to become visible. Nations positioning themselves as mediators or alternative suppliers of energy and technology are gaining influence and leverage that will outlast the conflict itself. Pakistan's role as a mediator between Washington and Tehran has elevated its international standing significantly. Countries that can supply energy alternatives to disrupted Gulf routes are extracting both economic and political premiums for that capability. However, these gains all come with significant risk attached. The longer this conflict continues, the greater the chance of broader global economic instability becomes. Energy price spikes are already fueling inflation in import-dependent economies. Trade disruptions are slowing growth in emerging markets that have no cushion to absorb the shock. Aviation, tourism, and manufacturing industries have experienced real losses due to fuel cost increases and supply chain fractures. The sectors that are winning precisely because other sectors are losing, and the scale of those losses is still growing. The story of the Iran conflict is ultimately not just about missiles and diplomacy. It is about economics. Wars reshape markets, accelerate technological change, and redistribute power and wealth across industries in ways that persist long after the fighting stops. The current crisis illustrates how modern warfare extends far beyond the battlefield, influencing financial systems, energy strategies, and technological development worldwide. The gains in defense, in finance, in AI, in renewable energy, they are real. But they are being built on a foundation of instability that benefits the few, while the many absorb the cost. That is the part of this story that deserves to be said out loud. So the question is not just who is winning on the battlefield. The real question is who is winning from the war itself. And more importantly, who is paying for it.